Welcome to this explainer. Today we're diving into something absolutely wild. We're tracking how ancient, fossilized organic matter literally became the lifeblood of our modern global economy. I mean, think about it. We're looking at the complete story of petroleum, or crude oil. This is the resource that fueled the rise of the modern world, completely shifted global power dynamics, and, well, now presents us with one of the greatest ecological challenges of our time.
We've got a lot of ground to cover today, so here's our roadmap. We'll hit the birth of black gold, then refining power, the distillation process. After that, geopolitics in the OPEC era, followed by crises, conflict, and consolidation. Then we'll look at the unconventional oil boom, and finally wrap up with the future, profits versus pollution.
All right, let's kick things off with part 1, the birth of black gold. We need to go back to the beginning to see how humanity first started using this stuff.
You know, it's actually incredible how fast oil went from just being, well, a random puddle on the ground to the primary driver of the entire industrial transport revolution. For thousands of years, people just used the oil that seeped to the surface for super basic stuff, like sealing up buildings or making medicine. But then hit the mid-19th century and boom, an energy-hungry world suddenly swaps out burning whale oil for distilled rock juice. Then, rolling right into the early 20th century, its utility absolutely explodes. You've got the invention of the automobile, the total reconversion of ship engines, and of course, the aviation boom during World War I. All of this permanently cemented oil's place in human progress. So, as demand naturally skyrocketed, the United States had this massive black gold rush, quickly becoming the biggest producer in the world. And as they rushed to drill, they needed a way to transport it, right? So they used specific containers holding exactly 42 US gallons. Now you might be wondering, why 42? Well, believe it or not, it was actually based on Old English tierce wine barrels. And here's the crazy part. To this very day, that highly specific volume, 42 gallons, or about 159 liters, is still the universal benchmark for pricing black gold worldwide. It's the standard we literally still use on global markets today.
Which brings us to part 2, refining power, the distillation process. Because we really need to understand exactly why this liquid is so incredibly valuable to almost every single industry on Earth.
It all comes down to this. Simply heating crude oil in a distillation column separates it into practically everything that makes up our modern world. It's like a giant, superheated puzzle. Look at how specific temperature bands completely dictate the output. At the cooler end, between 30 and 105 degrees Celsius, we get gasoline for our cars. Heat it up a bit more, from 105 to 160, and we get naphtha. That's the hidden ingredient in synthetic textiles, cosmetics, and plastics. Push it up to 230 degrees, and you get aviation kerosene to fly our planes. And right at the very bottom of the barrel, above 450 degrees, you get heavy fuel oil that powers massive cargo ships, plus the bitumen we literally use to pave our roads. So a single barrel of crude isn't just fuel, it's a multi-industry gold mine.
So, with oil firmly established as an absolute modern necessity, let's move right along to part 3, geopolitics and the OPEC era. Let's see how nations started maneuvering to control it.
Coming out of World War II, oil was no longer just some commodity you buy and sell. It was the ultimate strategic asset. Massive diplomatic agreements were being forged specifically to lock down reliable access to these immense Middle Eastern reserves. For instance, the United States signed a landmark alliance with Saudi Arabia, basically guaranteeing the nation's security in direct exchange for privileged access to its oil. Meanwhile, you had a consortium of Western companies completely dominating the global markets and, as you can guess, reaping massive profits. But of course, that Western dominance wasn't going to go unchallenged for long. In a direct response to foreign market control and some really intense nationalization struggles, like the US and UK-backed coup in Iran after they tried to nationalize their oil, producing nations decided it was time to unite. So 5 major oil-producing countries got together and formed OPEC. The goal? To reclaim economic power over their own resources. They had a really clear agenda: counter Western corporate dominance, increase their own oil prices, and establish a unified, powerful policy bloc.
Now, this massive struggle for market control inevitably led to some of the most volatile geopolitical decades in modern history. That brings us to part 4, crises, conflict, and consolidation.
Throughout the late 20th century, regional conflicts became incredibly intertwined with oil security. We're talking embargoes, huge supply shocks, and major international military interventions. Look at 1973. During the Yom Kippur War, OPEC actually used oil as a political weapon for the very first time. They embargoed Israel's allies and triggered the first massive global oil crisis.
Then you have the 1979 Iranian Revolution and the subsequent Iranian-Iraq War in the 80s, which directly threatened Persian Gulf supply lines and drew in Western military vessels. And by 1990, Iraq's invasion of Kuwait prompted a massive US-led UN coalition to intervene, which ultimately led to a permanent US military presence in the Gulf.
These shocks were an absolute wake-up call. Suddenly, industrialized countries realized the sheer danger of their dependency, and they scrambled to diversify. It was a massive, multi-pronged reaction. They implemented sudden conservation efforts, pivoted heavily toward nuclear and hydropower, even temporarily retreated back to coal, and started a frantic push by oil companies to find non-OPEC reserves. This panic is exactly what triggered those massive, accelerated offshore explorations in super harsh environments like the North Sea and Alaska.
But here's the catch. All this new supply eventually caused prices to drop. The sheer volatility of the era, mixed with the sky-high costs of running these new offshore operations, eventually forced massive corporate consolidation. By 1998, barrel prices were so low that smaller players simply couldn't survive on their own. This led to unprecedented mergers, birthing 6 giant global oil corporations. These supermajors would very quickly become some of the richest and most politically influential business entities in world history.
All right, let's fast forward a bit to the 21st century, where the landscape shifts all over again. Welcome to Section 5, the unconventional oil boom. Following the September 11th attacks, Western nations were urgently looking for even more energy independence from the Middle East, and that is where this specific technological leap comes in: hydraulic fracturing, better known as fracking. This was a total game changer. It allowed countries to access previously unreachable oil, fundamentally shifting the global supply map. Basically, by injecting fluid at incredibly high pressures, they could shatter subterranean solid rock layers and release the massive reserves of shale oil trapped deep inside. What followed next was a massive, high-stakes economic standoff on the global stage. On one side, you had the US strategy: use this new high-tech fracking to aggressively increase domestic production and finally shake off reliance on imports. On the flip side, you had the Saudi strategy. Saudi Arabia leveraged its vast, easily accessible reserves to try and squeeze out these much more expensive North American operations. They basically persuaded OPEC to flood the global market with cheap crude. The goal was to drop the price per barrel so incredibly low that American unconventional oil would just become completely unprofitable. But despite the immense pressure of those flooded markets and plummeting barrel prices, the strategy of relentless domestic production actually persevered. The US oil industry just absorbed the financial hits, relentlessly innovated their tech to lower operating costs, and pushed right through the price drop. Ultimately, this unconventional boom propelled the United States to once again become the single largest oil producer in the entire world.
But, all of this relentless extraction and consumption brings us to our final and frankly most critical section regarding the heavy toll of our oil addiction. Let's look at Part 6, the future: profits versus pollution.
Take a second to really absorb the sheer, staggering scale of our daily global consumption. We are fast approaching 100 million barrels of oil consumed globally every single day. And remember, 2/3 of that vast ocean of oil goes straight into the transportation industry, making it the primary emitter of CO2 on the planet. And the environmental impact goes far beyond just CO2 emissions. Remember that heavy fuel oil from the very bottom of the distillation column we looked at earlier? That is what powers maritime shipping, and it emits a shocking 3,500 times more sulfur than standard diesel fuel. This is causing incredibly severe air pollution all across our global shipping lanes.
The constant push to feed this 100 million barrel a day habit has led to some truly severe ecological consequences. Pushing into deep offshore drilling and scraping up thick surface bitumen has unfortunately resulted in some of the most devastating ecological disasters in recent history. I mean, we're seeing pristine forests completely razed to the ground just to access Canadian oil sands. We've witnessed the catastrophic deep-water borehole failure in the Gulf of Mexico. And we absolutely must acknowledge the tragic, largely ignored reality of the Niger Delta, an area that has suffered through 60 consecutive years of devastating oil spills. So, we currently find ourselves at a massive crossroads. It's a clash between the immediate demands of economic growth and the absolute dire warnings from climate scientists. IPC experts are practically shouting from the rooftops that we must drastically reduce emissions to limit global warming. Yet, the economic machine just keeps turning. We actually currently have enough known oil reserves to sustain our massive extraction rates for at least another 50 years. The supply is definitely there.
The real question is whether we can afford to burn it. And the economics of trying to fix this? They're incredibly complicated. Even as regulations try to curb the pollution, like the really strict 2020 maritime limits on sulfur emissions, market mechanics might just push the industry to explore even more extreme environments. Think about it. If the shipping industry is forced to abandon cheap, heavy fuels for cleaner, more expensive hydrocarbons, overall demand and prices could spike, and higher prices? Well, they immediately make risky, aggressive, unconventional exploration highly profitable all over again. Which leads us to a deeply, deeply unsettling irony. As global warming literally melts the Arctic ice caps, it is simultaneously exposing vast, untouched regions that happen to be extremely promising for new oil deposits. So, I want to leave you with this profound paradox to consider. Will our relentless reliance on oil ultimately fuel the melting of the polar ice caps, simply to uncover the very resources that will perpetuate the exact same cycle? Ask yourselves, what is the ultimate cost of our black gold truly going to be? Thanks so much for joining me on this explainer, and as always, keep questioning the world around you.